All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Thank you so much for being here. Yeshwant, much love to you. Crypto Wander, welcome in. Uh, Everything is doing well. I am doing really good on the trades right now, and hopefully you guys are as well. Dad87, welcome in, man. Thank you for being here. Glasshopper, welcome in. Thank you for being here. Matt Jenkins, welcome in, man. Thank you for being part of the Divine Hood family. Normal Swede, much love to you. It has been a roller coaster. Right now, we are kind of at some major decision points, whether we're going to see a bigger relief rally or not. And I have to say, Bitcoin looks kind of weak right here, right now. But we'll get into that in just a little bit. Little Rich 69, what's up, man? Welcome in. R Pink, thank you for being here. Thank you for modding. Let's go, baby. Oliver, welcome in. And let's see, John Shanks, morning to you as well. Samuel S, 93.5K possible. I do think 92 is possible. We'll talk about that in just a bit, but thank you for being here, Samuel. Thank you for modding for me. Luciano, welcome in. Good afternoon to you from Brazil. Wow. Yeah, it has been, I have not taken any trades today, guys. It has just been a really choppy day, and honestly, I am just waiting for some of the bigger levels. I mean, I originally shorted at 97,200 on the golden pocket retest. I compounded my short. Well, first of all, I took a lot of profit at 87.5. I took some profit up here at the back test of the value area high, but I compounded at a 90,500 once we lost these prior highs. And then I retook profit exactly at $86,300. So I am still in the short with my average price in like 93, 94, and my long position from $86,302. But that's all that I'm in right now. And yeah, much love to you, Bakito. Full Port 69, welcome in, man. Good evening to you as well. Let's see, Arabaz Rashid, welcome in. And Ja Fuel, what is up, Ja Fuel? Hump day, pre-hump day today. Guys, we'll do the live stream. We'll go over some of the altcoins because I didn't do a video on the altcoins yesterday. I primarily covered Bitcoin and the total market cap. But I want to talk to you guys about this total market cap because we could be about to see a major breakdown in the upcoming days to weeks here on the whole entire crypto market if the total market cap is about to lose this crucial support. So I'll go into Bitcoin. We'll go into the total market cap. We'll go into the implications for the altcoins. But guys, so pretty much, let me zoom out here onto the 8-hour chart. This 80.5K low, I said from the beginning, this was probably not a major low where we're going to see a reversal to new all-time highs or even up to like 116 or higher. And we were looking at a complex corrective move. First of all, when we lost this, we had lost our Fibonacci channel. And you guys have seen that. I've shown you the 3 rejections from the Fibonacci channel multiple times. And when we lost that entire bull market trend, which was that macro Fibonacci channel, and we closed weekly candles below, we were looking for the bearish back tests. We got 3 of them. We kind of rejected, but created a higher low, and we were holding the value area low of our 2025 macro range. So we were looking for a move up to the POC, but this entire structure here, I said, it looks far more probable to be corrective, where when we hit into that key resistance, we are likely to see a big drop eventually to come down and take out those 80.5K lows. And that looks like the highest probability scenario still right now. This was a major anchored VWAP. This was a major point of control of that 2025 price action range. And we have dropped all the way down to the value area low of our 2.5 month long range. This price action within here, we're primarily analyzing this price action to see what's going to happen. So of course we were looking for the shorts near the highs of this move, this corrective range. And we are also longing, like we longed on Wednesday, or I longed on Wednesday, $87,500. And I took a profit once we broke these Wednesday highs in here. And then I got stopped out on the rest of it over the weekend. Now I've also longed on the weekend, the lows. Guys, those are weekend lows. Keep that in mind. This happened on a Sunday. Weekend lows often get taken out. Weekend highs often get taken out. So we have to be aware that it is likely not only because our rejection from 98K down is far more probable to be an impulsive move to the downside, meaning if the move down starts with an impulse, you're likely to see a corrective move before continuing another impulse to the downside, whether that's going to be a sharp ABC zigzag or a more complex corrective move. But we are looking now at seeing some relief come in. We are at the value area low. We did take that liquidity. And guys, I talked about this liquidity for weeks before we came down here. On every single live stream we did the last couple of weeks, I highlighted to you guys the major liquidity that was sitting down at $86,000. I highlighted to you guys how this week in particular was a low volume trading week where a lot of the big players were out because it was between Christmas and New Year's, but it created such a strong liquidity trail that it was very unlikely the market makers were going to leave that liquidity intact before seeing a major move to the upside. So we finally did come down and grab, hit the value area low, grab that liquidity, and we're seeing a bit of a move up here. But the move up so far, I have to say this move up looks relatively weak. And even right now, we're almost putting in like this left shoulder, head, right shoulder, like topping pattern where we could break this down right now without even coming up to our local resistance. I am still in the long. I still have not taken any profit on the long position, and I won't. The first take profit I'll be looking at is 89.5K. But from the move down from 98K, what is important here is, and I covered this in Monday's video, I covered this also, I think primarily yesterday's video. We could be looking at this, and actually in last Friday's live stream, as a potential 5-wave impulse that's done. But there is a little bit of an issue with that. It's seeing this as a 1, 2, all of this is a 3, a 4, and then a 5. Your fourth wave is this 3-wave corrective move right in here being your fourth wave, is a lot shorter in time than your second wave. And generally the fourth wave is longer in time or as long as your second wave. Now that is not an invalidation. That means that the impulse could have been from 98K to 87.2K. It's done with. Now, all of this is part of a complex corrective move, which could even eventually bring us up to the golden pocket. But because we are in a flat here, it is less likely. And I covered this in yesterday's video. So we could be looking at the impulse being done at 87.2. And then we're looking at an A wave, a B flat, and we did come right down to that 1.236 Fibonacci extinction. We did grab our key liquidity with that low. And then we could be looking for a C wave, and the target in a flat for your C wave is to take out your A wave highs, which is $91,200-ish, 91.2. Now, I covered this yesterday again. Just keep highlighting this for you because I want you to know that this is a possibility. You can see something called a running flat. And a running flat is when you have your A wave, your B wave comes down and takes out the lows of your A wave. And then your C wave, instead of coming up to take out the highs of the A wave, it runs short and it rejects at a lower high before dumping. Now, that is common in a really bearish market with bearish sentiment. I would say our drop from 98K to 86K has been a very bearish trend so far. If we zoom out here, like onto the daily chart, it's pretty much all red, all a straight drop here. This is very, very big bearish trend in here. So yes, we could see that running flat. Now, if we're going to see that running flat correction, then there's a couple key levels for me to watch, and one level in particular. And it is this level between $89,200 and $89,500. There is a whole lot of resistance of confluences of resistances in this general area. So if we go to our CME gap and look at our CME gaps that 90% of the time they do get filled, especially if they're pretty local in price, local relative to the price action where it's trading at. So you can see our CME will close around $89,300. That would fill that CME gap. And then let me go back to the Coinbase chart. And if we take a Fibonacci retracement from those Friday highs down to the weekend lows, you can see our golden pocket is going to be coming in right in that zone, $89,300, right where that CME gap would fill. So in a running flat, you often will reject from the 618 or from that golden pocket, from that general area. So we could see that rejection from the golden pocket. But also, if we look at our time frame horizontals, we did confirm a new daily level right at $89,475. We have a new naked weekly point of control pretty much exactly on top of that daily level. We have a new naked daily point of control from the weekend pretty much exactly on that same level. So between 89,300 and 89,500 is the very key part of this box. And I even extended it down to around 89,180 just because that 618 tap is there. And of course, now because of yesterday, we took a swing failure pattern of the internal highs and we dropped to the POC to test it again. We now have another swing failure pattern of yesterday's highs kind of up into that resistance, where then we could see the bigger drop. What I've seen so far from this move here, all of this move here looks corrective to me. There is nothing to show that it's impulsive yet. Now, there is a possibility that we could be in a double 1-2 impulse or a triple 1-2 impulse where we're going to see some 1-2, 1-2s, 1-2s, and then we would want to spike in our third wave. But we would want to see that volatility coming in relatively quickly. We would want to see an increased amount of volume. We would want to see us really bust straight through this level, not see any kind of slowdown at this level of resistance. And we'd probably want to start continuing up till when we get to about, $92,200, where we could potentially see a rejection, or around 93,000, where that naked daily point of control is up there at $93,000. So, long from down here, short from up higher. I'm just playing the overall 2.5 month long range. We are still in that range, even though we did drop to the value area low of that range. If we just look at this range, we are simply just range trading now, guys. And range trading, we talk about this a lot. When you're near the highs of the range, like either the liquidity from the highs of the range, or if you see fake outs of the value area high and fall back in, you're looking for shorts near the highs, you're looking for longs near the lows or key liquidity grabs. And that is what I've really just been playing, range trading within this more complex corrective range that looks like it could be finally done. And we are about to see some major volatility coming on Bitcoin. Now, one of the key things that we saw here was at the highs of the range coming into our macro resistance. Let me go ahead and just hide this real quick. As we were coming up into that 2025 point of control and our anchored VWAP from the all-time highs, we were seeing very big bearish confirmations on the charts. On the daily time frame, let me zoom out to the daily, we were seeing confirmed bearish divergences on both NAMI and Market Cipher B. We were seeing bearish divergences confirmed on the money flow on NAMI, and money flow started to drain out. So very big confirmations that, yes, this could be a more macro high, a swing short opportunity for us to come all the way back down to take out your 80.5K lows and potentially even come down to 70K. Now, we play level to level as traders, so we're not talking about 70K yet. We're not even talking about the 80K lows. We're not looking at them right away. We will see bounces along the way. If this is going to be a 5-wave impulse to the downside, we should see decent bounces in your wave 2s, in your wave 4s. That can last quite some time, a week to 2 weeks. And those can be, 5-7% moves up in Bitcoin, and we can definitely trade those moves. That's why I am counter trend trading the swing failure pattern lows. I am long in a more macro downtrend. But that's what we do as traders. We look level to level, and we look for our confirmations, and we take trades. As far as Bitcoin goes, I would say from those lows touching the weekly, that was last Tuesday, we hit into that weekly level around 87,870. And we saw the bounce up from that. And then that was where we got our nice 3-wave corrective move. So let me zoom in on this. So we hit into our weekly right here. Perfect tap into the weekly. But we got that 3-wave corrective move. And by the way, guys, I warned you about this in the Telegram as it was happening, because we had pushed up, broke some local market structure, and then we had dropped to our golden pocket 786 area. I said, be careful, because if we see just one last third leg up grabbing these highs and we start to lose those highs, I am going to expect new lows on the chart. And we got that. And I warned about that ahead of time in real time in the Telegram. And guys, pay attention to that Telegram if you want updates throughout the day on what I'm thinking on Bitcoin. I also let you guys know about this level yesterday in the Telegram, this level of resistance. But right now, we're kind of just waiting to see what happens, and Bitcoin is in a smaller range. We've been forming a lot of ranges within ranges on Bitcoin. And if we look at from that weekly tap on last Tuesday, that's a week ago, we have kind of formed a sideways range. And so we can turn on that sideways range from last Tuesday's low to this Tuesday, obviously. And you can see that we are now kind of trading back within our volume profile after deviating the volume profile to take that liquidity into the golden pocket, into the value area low. We are now trading back within that volume profile. So it is the highest probability that because we are kind of reclaiming that value area low, we have a high probability of at least moving up to the point of control of that volume profile. Well, that happens to be where our macro or our local resistance is. Also, if we turn off the week-long range and we look at our 2.5 month long range, if we just turn on that 2.5 month long range, you can see that we had lost the POC of the range, which was around $87,500. We lost the POC over the weekend, took the liquidity, and then we have worked on back testing that POC multiple times, and it is still holding multiple times. Because it is holding as support, we can expect potentially a move up to the value area high of the range. And so the scenario of the flat that I talked about earlier in the stream, where we could see A wave, B flat, and then we're looking for the C wave. Most commonly, you'll see a normal flat where you do come take out the highs of A. So coming up to take out your 91.2K highs, we could even potentially come up to hit that value area high around $92,100, $92,200. And that would be more likely, in my opinion, than the running flat where we do reject from 89.5 and then come down and make new lows. So we'll have to see how this plays out. We're in waiting mode right now. We're kind of in consolidation and have to sit on our hands and wait for a move to happen. If you did not catch the SFP, or if you did not catch some of the shorts from up here, or the short from up here, then we're kind of just waiting. But I would say a relief rally is due, because whether we're looking at this move down being a finished impulse and we're in a bigger corrective move, or if this is all a wave 1, wave 2, all of this is a wave 3, we're looking for a bigger wave 4 as a flat, and then you could get your wave 5, meaning this whole impulse would be done. And after this impulse finishes, we would be looking for a 3-wave corrective move up towards the golden pocket before potentially a big leg down in a wave 3. Overall, I've talked to you guys about this. I am still more macro bearish on Bitcoin, expecting us to come down and see those lows taken. So let me zoom out to the daily time frame. To come down to take out those 80.5K lows, looking at this as being an impulsive move to the downside, with us seeing a wave 1, wave 2, wave 3, wave 4, and wave 5. Now, yes, I understand a lot of people are disregarding this as an impulse to the downside because your fourth wave is relatively long in time compared to your second wave. If we look at our second wave in time, that was about 17 days. And if we look at our fourth wave in time, that was, oops, didn't mean to click there. I think it was 54 days. It was 54 days. So it is less than 3 times the length of your it's 3 times the length of your second wave. But here's the thing. Once you start getting past the 4 Fibonacci time, 4 times the length, that's when you need to start worrying. We often see on lower time frames, your fourth wave is 2 to 3 times as long as your second wave. So it has not been invalidated, not even as far as time. It's been a concern as far as time, but as far as invalidations, no, we can still say that this is impulsive price action to the downside that is not done. That would mean that rejection from 98K, we expect a 5-wave impulse to the downside, and the minimum target would be to take out 80.5K, but we could drop if we're looking at a bigger C wave down here in an impulse, our bigger target is to take out your A wave lows. This is a flat, just like I said earlier on the lower time frames, we're looking at a high time frame weekly flat, which would be taking out your $74,000 lows and potentially even dropping to 70,000 over the next coming couple of months here. But within, we're due for a bounce. We're due for a bounce coming up soon here. We're due for a bounce. And we did have some bull divs on the chart as we were coming into that $86,000 low. And now I'm just looking for those potential flat corrective areas, $89,500. And I'm looking at 91.2 and 92.2. Talked about that a little bit in yesterday's video, and there's honestly not too much to update on from yesterday's video. We've been just chopping really kind of crazily today. Money flow doesn't look too bad on the 1 hour. We are starting to cross over into the green on the 1 hour, and I am expecting, and we did also print a hidden bull div on NAMI. I am expecting a move at least up to fill that CME gap, but we'll see what happens when we get there. Okay, let me check the chat here. Welcome in, everybody. Thank you so much for being here. Please hit the like button on your way in. If you get any sort of insight into the market from this live stream, please hit the like button for me. Please share the video with anyone you might think finds it interesting. Crypto Clan World, welcome in, man. Thank you for being here. Abir, good morning to you. Abir, guys, Abir's an awesome thumbnail guy. If you guys need anybody to do your thumbnails, he is a genius at doing them. So, Abir, thank you for doing that with me. Appreciate you, man. Diamond Palm, welcome in. Yeah, what's up, man? It's good to see you in here. Warthog Thunderbolt, can you turn up your mic a bit? Yes, let me know. Okay, does that help, guys? Check, check, check. Is this a little bit better for the mic? Will you please text in the chat or type in the chat? Let me know if the mic sounds better now. Wouldn't these lows being taken out and a nice 4-hour bull div form? Yes. Yes. So, Liam, welcome in. And if we do come down and take out the lows again, then yes, we could see another nice drive of bull divs. And there is a count within this move. Sounds good. Thank you, R Pink. I appreciate that. So there's a lot of different possibilities for this kind of what we're seeing right here. And we could be looking at, as your wave 5, you could be looking at an ending diagonal. So this could be a wave 1, a wave 2, a wave 3, and then you kind of get this ending diagonal in a wave 5. You get your 4, and then you kind of get this ending diagonal as a wave 5 to the downside, which means we could take out these lows again and then see the corrective move before seeing a wave 3 down. So yes, there is some possibilities that if we do come down and take out the lows again, in my opinion, though, and this is how I personally play this, and I'm not a financial advisor and I don't give financial advice, guys, but if we do come down again, I'm really only going to be looking for kind of like a double bottom SFP grab. So I would want to grab the weekend lows because remember, those are weekend lows. And so they're more likely to be targeted because it's a weekend low. So if we do come down and kind of double bottom, grabbing that liquidity and then actually see a rise, I would attempt a liquidity grab of that low, but that's about it. If we start dropping a little bit too far, if we break $85,400, I am not looking for longs. I will be waiting for a bigger sign of strength or recovery. But yeah, we'll if that happens, it plays out, and it's very easy. These are why swing failure pattern trades are the most favorite trades for a lot of traders, because you have a very simple confirmation. So right now, at least on Coinbase, our $86,000 is the low from Sunday. So what we'd be looking for in that case is if we do come down again, you want to pierce that $86,000 low, come down. You could come down as low as like $85,500. And then as soon as you reclaim it, you can enter long, but you want to wait for the reclaim. So, and then you would put your stop below that wick, and you would be targeting, in this case, I would be targeting, because we would have some highs up here. I would be targeting that CME gap and that daily and naked weekly point of control right up in this area. And that would be a 5-to-1 risk reward trade just for a TP1. So we would have to see how that plays out once it gets there. But once again, I would only be taking that long if we confirm a swing failure pattern there. Okay, let's see. Yeah, C-Train, welcome in, man. Thank you for being here, and thank you for that comment, man. I try to give you guys as much details as I can. Stod Stephanos, Todd Stephanus, welcome in as well. Lost X, welcome in. Divine in a strong trend. We don't need to hit the 618 for an ABC correction. No, we don't. You're right. In a strong trend, you don't have to. Now, the 618 is still the most common target, but you can reject actually from the 382. So if you look at my Fibonacci retracement poll, let me just pull a random fib, and you come in here and you see if I have this called strong trend. This is what I labeled it. But if I click on that, because in a strong trend, the 382 will often reject you, and then you'll continue the trend to the downside. So 382 is a strong trend, and the 236 is less common. It definitely does, like we've seen instances with Bitcoin, especially in the uptrends, where it'll have a strong uptrend. It'll only drop to the 236, and then it continues the uptrend and kind of continues breaking out. But the 382 is pretty much very common to be hit in a strong trend. So I would say, yes, hitting the 236 would be sufficient, but it's less likely than coming up to the 382. Yes, and so 89.3 is that CME gap fill, and it's right around 89.5. So what a lot of people are looking at right now, and the reason why I'm looking just a little bit higher than 89.3 is because you can see our golden pocket is at $89,300 as well as our CME gap. So a lot of people are going to say, okay, I'm going to short $89,300, and if look for a drop straight from that level. And if it comes a couple $100 higher, depending on what kind of leverage they're using or where their stop loss is, we could come up to that $89,500 area, stop some of those traders out, or even liquidate some very high leverage traders on that small couple $100 move more to the upside, and then we could lose it. So that's what I'd be kind of looking to just pierce a little bit above that CME gap fill. I've shared my Elliott Wave prediction on your Discord chat. Awesome. Machi HK, welcome in, man. And I'll take a look at that really quickly here in just a minute. We also have weekly money flow going into the red on Market Cipher B. Yes, and guys, on the weekly time frame, in the past, when Market Cipher B has shifted from the money flow from green to red, and you can see just this week with the candle close on Sunday, we have now officially confirmed a flip to red. Anytime we have done that in the past, it has caused major downside, major bear market or bearish trends have confirmed with that drop into the red. And so I would just say be aware of that. You can see on this high, and by the way, it's funny that this range was the one we've been taking the bars pattern from. Let me do this real quick. Let me hide this Fibonacci channel. And we've been looking at primarily this range. Remember, a few times in the last couple of weeks, we've taken that bars pattern and we have taken this trend and we bring it over here, and we showed how it's almost the same exact range, right? And the last time we had a sideways and up kind of corrective range, just like we're seeing now. As soon as we crossed into the red, big drop to the downside. Well, literally, we're almost seeing a repeat of what happened at the beginning of the last bear market, by the way. We got our initial drop down. We got that weekly green dot. We got that push to the upside for that kind of corrective range, faking everyone out, thinking we're going to come take the all-time highs, and then you drop. We're literally seeing it play out almost perfectly right now. The same thing. You have that same exact kind of weekly trend in here where it does look like that three-wave corrective pattern. Like, look how similar that looks. Jesus. Let me get in here and very, very similar price action here where we could see, now that we're crossing into the red, the big drop come in soon. And while we're talking about this, I want to go really quickly and let's see. Thank you for the super chat. Let's see, where is this? It's cutting off your name. Thank you for the super chat, man. You keep things honest and realistic, which is refreshing in this space. Appreciate the effort. Well, I appreciate you being here, man, and I appreciate the super chat. I appreciate the kind comment as well. And thank you for being part of the community, for real. Okay, guys, really quickly, I want to go to the total market cap because this is hyper important. So for quite some time now, I've been on Bitcoin talking about our Fibonacci channel, how it had been our trend for the entire bull market, and that we had finally lost it and started closing weekly candles below it, which signaled that we could see a bear market come in or a bigger drop to the downside. Okay, now you can see here that on the total market cap, we've had this pitchfork trend, which is pulled based off an Elliott wave pattern. We have our big weekly wave 1, wave 2, wave 3, wave 4, wave 5, finishing a 5-wave impulse where we then could be looking for a flat correction and then maybe continuation up in a super cycle. But we're looking right now at a flat correction in here where we could come down and take out your lows around $2.3 trillion. But specifically looking at this trend, the last part of the trend after your wave 3, it's a very important trend, especially if the bull market's going to end. So when Bitcoin lost its trend, we saw a pretty aggressive dump. This same pitchfork on Bitcoin, we saw a pretty aggressive dump. For the last 2.5 months, you can see we've come down to the bottom of the pitchfork. And really on the daily time frame, it is holding as support. I'll zoom in here a bit more and expand this so you guys can see this. But we really haven't had any daily candle closes. We did have one, but instantly reclaimed it the next day. But you can see 1 tap, 2 tap, 3, 4, 5, 6, 7, 8, 9, 10, a bunch of taps in here. But last week we had lost that support and we were back testing it multiple times and we couldn't get back in. And remember last week, I think it was on Friday or Wednesday's live stream, I was telling you guys, I'm really concerned that we're not able to get back and close a daily candle back inside of this pitchfork. And the last time we saw something like this on Bitcoin was on the Fibonacci channel where we then ended up dumping. So I said, watch out for the weekly candle close. If we close a weekly candle below this the pitchfork on the total market cap, it could get bad. Well, we closed the weekly candle below. And if we zoom in onto the daily time frame, on the daily time frame, we have closed multiple daily candles below and even closed one, tried to get back in 1 day, tried to get back in 2 days, tried to get back in 3 days, and even on the 4th day, 4 taps in there, 4 days in a row, trying to close a daily candle back inside your pitchfork. 4 days in a row, we have failed. And then now we have made new local lows because if you fail a bearish backtest, you expect new local lows. So we did that. Now we're coming in for a higher time frame backtest of that channel, of that pitchfork, excuse me. So depending on what happens here, if we do come up here and reject this rejection here could be a big move to the downside. We really need to be careful. And we are printing some hidden bear divs on the 4-hour time frame. And if we zoom out like 8-hour time frame, we really want to be watching for that money flow to roll out again. We did have some bull divs. We do have some bull divs on the 8-hour. You can see here bull divs, very slight bull divs on NAMI as well on the 8-hour. But this 8-hour bull div might only give us a push back up to bearishly backtest that area. And yes, you could wick past it just a little bit to grab liquidity. So we have to be careful because if we now again close a second weekly candle below this pitchfork, we could see disaster strike the crypto market in the next couple of weeks. And it makes sense also because we are looking for Bitcoin to take out those 80.5K lows. So are we going to see some corrective move up to 89.5 or a corrective move up to like 91, 92 and then see that big third wave come in? Big third wave come in where we could be expecting some harsh volatility to the downside. Okay, let's see. Can we draw a channel on the SFP low, previous low, and the wick if the price comes down to touch the bottom? So I think I know what you mean here. I was looking at this earlier. I had this on my chart earlier. So this kind of looked like a channel earlier in the day here. And so I had taken a channel, a parallel channel from the SFP wick low down to that golden pocket retest. Because remember, that was your golden pocket. And you bring it up to that high up there, that kind of first big high. And this was our channel that we were chopping in. Now, it's not the cleanest channel anymore. If I zoom in on the 15-minute, it's not the cleanest channel anymore. But you can see the midline was respected. Resistance, resistance, support, 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 lost it, resistance, 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 resistance. Kind of try to chop around and flip it to support. We kind of did. And then, now though, it's the bottom of the channel is kind of acting a little bit, it's not being highly respected here. So, I mean, you could look at a little bit steeper of a channel where we pull it from the highs, your first high to your high from yesterday, and you bring it down to that swing failure pattern low. So that's another way to pull the channel. And let me fix that. Kind of something like that there. And then you could even pull it down to this low, right, like that. And then in that case, you lost the channel. We back tested it earlier today because we rejected on the bearish back test. You expected new lows below the local lows. So we rejected the bearish back test. We did make new lows. We took out those lows. Now we're pushing back up here. Honestly, like, guys, this price action is so choppy and so volatile. What we're seeing in the past week, or really even the past 2 days, like this in particular, is so messy. I'm not even interested in trading this because it's just a mess. So, like, what are you going to trade? Maybe the SFPs, or maybe, like this, you could say this is some sort of flat that we're seeing in here. And then we're about to continue up to hit that CME gap fill. But honestly, like, this is such a crapshoot right now that you're in some ways kind of gambling. If you didn't get in at the major support level, or at the golden pocket retest on that higher low, because that was our golden pocket. If we pull our Fibonacci from the Sunday lows up to the highs that we saw on Monday, you can see we did come down and hit that golden pocket there. If you didn't get in on this low, or if you didn't get in on this test rate here of $86,900, or pretty much $87,000, then I wouldn't be attempting longs right now. I would probably wait for another liquidity grab of the lows, or at least until you take out that low there at 87,000. And at the same time though, guys, you don't want to be shorting after a multi-$1,000 drop, a multi-$1,000 week, 2-week long drop to the downside. You don't want to be shorting after seeing that kind of drop, because you're shorting into a macro volume support level, being that value area low of our 2.5 month long range. So you're kind of stuck. Now, I'm not saying, what I'm saying as far as like bigger day trades and swing trades. Obviously, if you're an intraday scalp trader, yes, it's acceptable to take trades in this area. If you're looking for like, $1,000 move or a $500 move, you will see that. You will be able to get small trades within that zone. Like yesterday, for instance, we came up, we took out the Monday highs with a swing failure pattern. So you could have shorted this. A short right in here, stop goes above the wick, and you could have been targeting just even your local golden pocket, which you would pull from the low to the high. You could have been targeting this golden pocket in here, which is where we kind of bounced right there. So that would have been an acceptable, what was that, 6.5 risk to reward ratio on just a super tiny move. You could have made 6% risking 1%. You could have made almost 6.5% risking 1%. So but these kind of scalp trades like this, you really have to pay attention to what you're doing. You have to have confirmations. It was a confirmation because we did get the swing failure pattern, and you just got to be careful, because look at, if you're looking for the swing failure pattern of the high to come all the way back down and take out this low, well, it might not. We might do this, and then come up here. All of a sudden, you're stopped out. If you didn't take a profit, you just took a loss on something that was intended to be a scalp. So if you're doing trades like this, low time frame intraday trades, just make sure you're not getting greedy and take profit at scalp support levels. Do not get overzealous on your trades, because it doesn't matter about the size of the move. There's people that would make more in that little move from $88,800 down to $87,600. So a $1,200 move. You could make more money in this move than on a giant move to the downside, than on actually this move here, depending on your risk to reward ratio. Because let's say on this move here, you waited until we drop below those previous highs at $90,500. So your short is going to be when you break below those highs. You have to put your stop loss above the wick with a little bit of breathing room, And let's say you're just targeting that low at $87,200. Well, that's only a 3.86 risk to reward ratio. So even though this was a much larger move as far as price to the downside than this little move would have been a better trade because the risk to reward ratio was better because your stop loss was tighter. So that's where scalping can be, if you understand what you're doing with scalping, it can be very beneficial. But be careful, guys, because we have a lot of chop. We actually do have some news coming up as well. Let's see here. Tomorrow, we do have the FOMC meeting, I believe it was. Yeah, FOMC statement, the federal funds rate and the FOMC statement tomorrow. Now, it's very likely that we're not going to see a change in the interest rate. It's probably going to stay the same. So it's really going to matter what Jerome Powell says tomorrow. If he comes out bearish tomorrow, that could be a bearish catalyst to break us down. But be aware that we do have news catalysts that can also cause short-term volatility and wreck your scalp trade. Wouldn't want to break and close below the low, but a nice SFP of it because it's a weekend low. Yes, Liam, that's exactly what I want to see. A SFP of the weekend low would be nice. Yeah, we'll check the 5-minute time frame. Let me go check Machi HK's what he sent to me in the DMs real quick. All right, Machi. So you're looking at that 1, 2, 3, 4, 5, that big primary count in blue. Let me throw this over here for you guys. And he's looking for a count very, very similar to mine. So you can see this is from the all-time high right up here. He's looking at that same drop as a wave 1, 2, 3, this same corrective range to 98K as a wave 4. And then he's looking for a drop in a wave 5. And I can't tell exactly where that ends, but it looks like around 70K. And you're looking for within that bigger blue 5th wave, you're looking for a 5-wave countdown. That's exactly what I'm looking at, Machi HK. That's my primary scenario as well. So actually, I will show you guys on my chart what Machi HK is looking at. Let's just go to this chart here. I'm going to go ahead and go onto the daily time frame. And what we're looking at is that bigger 5-wave impulse down. And this is my primary count, as well as it looks like Machi HK's primary count. So you have your big wave 1 in the crash on October 10th, a wave 2 correction, a wave 3, a wave 4, and then a 5th wave. Now your 5th wave has to take out your 3rd wave lows. So we have to break 80.5K. Now I've done some Fibonacci targets on this 5th wave. And the targets for the 5th wave are between the 1.236 Fibonacci extinction and the 1.618 Fibonacci extinction. We'll look at where this 1.618 is. And I showed you guys this on last Friday's live stream. That 1.618 Fibonacci extinction is right into your very key support of $70,000 or $70,000 to $68,000. Now that is a relatively long wave 5. I understand that. That is a long wave 5, maybe in some ways even longer than your wave 3. But within this 5th wave, remember, within your wave 1, you're looking for a 5-wave count. Within your wave 3, you're looking for a 5-wave count. Within your wave 5, you will be looking for a 5-wave subcount. 1, 2, 3, 4, 5. You'd be looking for a 5-wave count within the bigger primary 5th wave. And that is what I believe, and I've been talking to you guys this last week, that this entire push down from 98K down to 87 or 86K is all just a wave 1, and we're about to see a relief rally that could last a week, could come up to the golden pocket. It doesn't have to, or it could come up to 92K before seeing a wave 3, 4, 5. That's what we're looking for over the next one. So I said, really all last week, this could be only the wave 1 of a much bigger impulse down on the daily time frame. But good analysis. Now, after that, if you guys can see, let me go back to that Machi HK. After that, you are looking for a larger ABC correction, and I would be too. You're looking for a larger ABC correction, potentially to come up to, it looks like what, 102, 103K to those lows in there. And then see another 5-wave move down, pretty much confirming a bear market, because after this impulse, let's just say this whole thing is an impulse, right? Down to 74K to take out your 74K lows. Then if you see a 3-wave corrective move up to golden pocket or up to 0.5 Fibonacci or up to, just other key resistances, but overall making a lower high, then you would want to see a lower low come in too. And this you'd want to see is impulsive price action. And that would pretty much confirm bear market to me as well. Although I will not be waiting that long. I've already announced that I do think we're in a bear market or we're in a bearish trend that could last 6 to 9 months. Okay. Serious Crypto, welcome in, man. Okay. Can you check the 5-minute time frame? Yeah, we'll check the 5-minute. Also, let's look at our order flow here real quick. Order flow, this is on the 5-minute time frame. Let me just refresh this here. We're seeing a short squeeze right now, guys. So earlier today, we saw just earlier today on this drop, look at all the shorts that were coming in, primarily from here to here. Shorts were coming into the market. Those were primarily fresh shorts that were coming into the market, right? So fresh shorts coming in, they successfully made a new local low. But after making the local low, we now had, especially towards the end, we had a lot of shorts coming in, and actually a lot of shorts coming in at the top up here, which was interesting. You see this push up that we're seeing in the last hour to 2 hours. CVD is increasing, meaning market buys are coming in, but because your open interest is kind of dropping here, it's a little bit of a short squeeze. So it's not new long positions so much that are making the price push up right now. It's a little bit of a local intraday short squeeze that's making the price push up right now. Now, remember, guys, with short squeezes, if we don't see new money come in soon, this could fall right back down, and we can continue this kind of channel-y structure here. Boom, 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 boom. Seeing some sort of channeled structure in here. And that's primarily a lot of bot trading, right? You get those. Actually, if we just go onto our trading view chart and we look at this 5-minute time frame and we pull a little channel, this tells me a lot of bot trading is happening right now. Low, high, just following a downtrend channel. You can see the midline is being respected. So throughout the day, it looks like a lot of bots are kind of just chopping this locally. Are we about to see a rejection here and come down? I mean, let's see here. 1 minute. Do we have bear divs on the 1 minute? Not really. No, we don't have bear divs, but money flow is, we have money flow bear divs on the 1 minute on Market Cipher B. But yeah, let's see if we get, I want to see us continue up to $89,500. And I do think it's more probable that we will. But I will say this. So far, from our weekend lows, all of this so far doesn't really look impulsive to me. If we look at our volume is relatively low, except when we ended that flat correction in there. You got a spike in volume on the flat correction, but volume is relatively low here. So, you don't necessarily want to see that. You want to see a steady increase in volume, especially if we're about to break out in a wave 3. You want to see that steady increase in volume, and we're really just not seeing that kick in yet. All right, Circle. Yes, we will do Circle. My entry is 76.8. I want to exit it before BTC dumps into the... My entry is 76.8 on Circle. Yes, that's a stock. Okay. What do you think about us retesting 74K? The Holy Quorum, I do think that's possible. I think that's probable, but not for some weeks. Like I'm saying, like I said on that higher time frame, I do think we are seeing the start of an impulse in a 5th wave to the downside. Okay, so here's the thing, guys. There's 2 ways to look at this drop from the all-time high. There's primarily 2 ways to look at this. We could be looking at a larger 3-wave corrective move where we're in a WXY correction, a larger WXY, where this was a W, this was an X, and now we're about to see a Y wave down. And within your Y, you're going to see an ABC. It's a 3-wave move in Y. Because you'd be looking at this as a 3-wave move in a W. you'd be looking at this as a 3-wave move in an X, and then we would want to see a 3-wave move in a Y to at least take out your 80.5K lows, but probably to come down and take that liquidity of the lows of our big sideways range, right? So that is the more complex corrective move. Now, I know some very respected Elliott wave traders that are looking at this price action as a larger WXY correction in progress, not an impulse in a C wave. So they're looking at it like this. W here, X here, and a Y to come down, right? To take out your 80.5K lows. Now, I still am looking at this as that 5-wave impulse. Wave 1, wave 2, wave 3, wave 4, and a wave 5. Now, if you're looking at it like that, either way, you are looking at that 98K being a major rejection area where now we are more probable to come down and take out your 80.5K lows at the very minimum to take out your wave 3 lows, right? So whether it's a WXY or a 5th wave of an impulse, the bias on the larger time frames is down with small bounces along the way, of course, right? With small bounces that can last a week or 2 weeks along the way. If it's the bigger flat correction, which let me just show you guys this. I've shown you guys this multiple times, but I will cover it really, really quickly here. And I covered this on that video with Jason, that collab video with Jason. Let me zoom out to the 3-day time frame. For our entire bull market, we had a very nice 5-wave impulse. 1, 2, 3, 4, 5. The reason why I'm ending that impulse at that high in February is because we broke market structure by taking out these range lows. We broke market structure bearishly on the weekly time frame, right? We made a new weekly bearish break in market structure. So because we broke market structure bearishly on the weekly, we could say, hey, this entire impulse is complete. And now we're in some sort of corrective move. Now, in a very bullish market, let's say this is a super cycle. In a very bullish market, you could have a flat correction where your B wave takes out your all-time highs and comes up to between the 1.236 and the 1.382, which is exactly where we came up to and rejected exactly from our pitchfork midline. And then you want your C wave being an impulse to the downside to come take out your A wave lows, which is 74K. So yes, I am looking potentially to come down to take out 74K. 1, 2, 3, 4, 5 coming down to take out 74K is still a possibility. And if this is a super cycle, let's just say this is a super cycle. You had your 5-wave impulse, you had your ABC flat correction. After that flat correction ends, coming down to 70K, 74K, we then could see a whole nother year of another impulse to the upside, potentially, up towards 200K. So we'll see. But now I would say this. I'm very cautious about this being just a flat and now another impulse for another year because of our high time frame bear divs on the monthly, on the 2-month chart, on the weekly chart. We have a lot of bear divs. Any thoughts on Solana? Yes, I will. Let me go through some of these altcoins. Sui, we'll go through Solana. We'll go through Sui. We'll look at Bitcoin gold chart. Yes, we're going to go look at some of that right now. So let me see. What was that first one? Circle. I'm just going to check Circle out real quick. CRCL. And guys, before I go into the altcoins, I just want to take a second to shout out the partners of the channel. The main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description, you can get a minimum of 20% discounts on trading fees. You can earn up to 40% you can earn up to 40% discounts on trading fees with a minimum of 20%. You can earn up to $8,100 in futures trading bonuses, depending on how much volume you move in the futures markets. And they're offering some of the best initial deposit bonuses in the entire industry. For instance, if you deposit just $100, you can get a 50% deposit bonus. And then 500, you get a 20%. 1,000, you get a 20%. 5,000, 10,000, 20,000, you get 10% deposit bonus. If you're interested in signing up, the link is in the description. I have also partnered with BYDFI to create a Telegram community where I've told you guys about my trades. I told you guys about the short from around 98,000 on Bitcoin. I told you about the long from 96,000 on Bitcoin. Also some of the scalps in between there. So I try to keep you guys updated on what I'm thinking on Bitcoin throughout the day and on the altcoins. So if you're interested in joining that Telegram community, it is free to join. It's a private community. It's a partnership with BYDFI. It's a free community. All you need to do to get in there is to sign up with BYDFI using my affiliate link and then deposit $100 into the exchange. That $100 is still your money to trade with. You will get the 20% discounts on trading fees, and you can earn the 50% deposit bonus if you KYC. Now, once you've signed up and deposited the money into the exchange, click the Telegram link in the description of this video. And once you're in that Telegram channel, it's a verify channel, you're going to type in /verify in your user ID, which will be right up here next to your little, your comic guy. And that'll get you into the Telegram. /verify in your user ID. And once you're in the Telegram, you are in. Second partner of the channel is going to be NAMI Trading. And NAMI is this momentum and money flow indicator down here. And I use it for all of my confirmations on my trades. So first off, my process. I mark out my key levels of support and resistance. And as we're coming up to those levels, not in the middle of nowhere, but as we're coming up to those levels, I am now going to go down to my indicator to see if I have bearish, if for instance, if a short position, like if we're going to come up here and reject from 89K, I'm going to be looking for potential bear divs as we come up to that resistance. And if I see bear divs, it's a confirmation for me to enter the trade. I'm not randomly and blindly entering trades with no confirmation. I wait till I get to my levels that I'm prepared for. If I'm prepared and I see the bearish confirmation, I take the trade. So NAMI has been an invaluable tool to help me stay in, get in good trades and stay out of bad trades. I have partnered with NAMI to give you guys a 50% off discount. If you use my affiliate link in the description and you use Divine50 in the promotion box, the discount code Divine50, you can get 50% off. Lastly, I do have Bybit and MEXC as both two other exchanges that I'm partnered with. They're both really great exchanges offering discounts on trading fees, and Bybit's offering up to $30,000 in futures trading bonuses, and MEXC is offering a 10% initial deposit bonus up to $1,000. So if you guys want to help me, signing up with either of those exchanges also helps as well. It's just a way to say thank you to the channel. I'm not getting paid from them. I just get a small percentage of your guys' trading fees with all these different exchanges I partnered with. Okay, Circle. Let's get back to Circle here. CRCL. All right. Wow, man. This thing is just dumped. So what we were looking at is from our highs, we were looking at that 5-wave impulse. A wave 1, a wave 2, a wave 3 pretty much came down to your 1.618 Fibonacci extension. We got the 3-wave corrective move right between the 382 and the 0.5 is your wave 4. And then we were looking for a wave 5 down, one last big wave 5 to end it. Now, the scary part about this is in that wave 5, you can see 1, 2, you have a huge extended 3. Your fourth wave came up once again between the 382 and the 0.5, and then we might now need a new low to make a 5. But that is a huge fifth wave overall in our primary count, right? That is going to be, this is a wave 1, a wave 2, 3, 4, 5, 3, 4, and then your fifth wave is hugely extended. That is not ideal to see, guys. So unfortunately, I mean, it is not been invalidated because we did reject on within your wave 5, you're still looking for a sub count, right? 1, 2, 3, 4, 5. Within your fifth wave, you're looking for a sub count of 5 waves. But because this push down was so aggressive here, I would have to say that we could be even looking at a more bearish count. Unfortunately, we might have to look at this as a double 1-2 impulse. 1, 2, 1, 2, and this is your third wave. And now we're looking for a 4, 5, 4, 5. So we could be looking for some more downside on this thing overall. But let's zoom in here. Let me just get rid of this. Let's zoom in here and look at what we have here. We'll get rid of some of this stuff on the chart. I would say a very nice low. I mean, that was pretty much your listing lows. You came down to pretty much listing price. We've been chopping around in a range for a few weeks. we're starting to lose that range now, and we could even we'll pull a couple volume profiles. So we'll pull it from that low over. Yeah, and you can see it primarily, all the volume is within this upper range here. So I would even say something like this. This upper range is what was important. We're losing it. We are coming down to the bottom of the pitchfork band. You can see the pitchfork band is kind of trying to hold a support in here. But I would like to pull a bigger pitchfork now. Now let's hide this pitchfork for a second. And now that we have this bigger 3-wave corrective pivot in here, I would like to pull a more macro bearish pitchfork. So we're going to go from that high down to the major low, up to that major lower high retracement. And we're going to put this on a skiff pitchfork. Okay, let's see here. Let me just hide this range for a second. I mean, you do have some respect in here. Bounce from the, we do have some respect. Let me check out the modified version to see if the respect is a little bit cleaner. Ooh, yeah, I would say this is a little bit cleaner here. So we are trading within a bearish trend. It's a pretty strong trend because this is a modified, so it's a steeper downtrend, which we have been in a pretty steeper downtrend. But just even looking locally, we pretty much bounced from the bottom of the pitchfork, worked your way up past the lower band, kind of chopped around and formed a bit of a range between the upper band of the pitchfork and the midline. But you can see here what was important is rejection from the band, tried to break above it, but failed. And now we're breaking underneath it, bearishly backtesting it and dropping. So I would not be surprised if we continue dropping until we hit the midline. Okay, so the midline, and let's also pull our Fibonacci here. I think, first of all, on a higher time frame, I think it's likely we take out these lows. But let's pull our Fibonacci from the lows to our range highs. Yeah, we'll go to that golden pocket 786. So we've already lost the golden pocket. We've already lost the 786. Today, we're kind of losing that 786. And let's see if we've hit the 886 yet. Because in a larger downtrend, yes, we are hitting the 886 right now. Very important. So this is very important, guys. We are in a larger downtrend, making lower lows and lower highs, right? Lower low, lower high, lower low, lower high, lower low, lower high. Since we have now, from the last big low to our retracement highs, since we have now come down and tapped the 886, yes, you could see a bounce from this 886, but because we have tapped it now in a larger downtrend, it makes it far more likely that these lows do get taken out. Also, as far as our Elliott wave count does, it suggests that those lows get taken out. So now what we could be looking at, because we're starting to bounce from the 886, we can now come in here and look for potential shorts. I would just go from the range highs down to your lows for today. And we're going to be looking at that golden pocket area. And that golden pocket around 90 or 82.91 is also going to be where that range point of control is. If we look at this range point of control in here, actually, it's a little bit above the range point of control. In this general area is where I'd be looking between like 82 and about $81 is you could see a big rejection there. We'll look at our naked daily points of control. Yeah, so naked dailies, we have a few of them. Let's look at that weekly. Naked weekly point of control, pretty much at your golden pocket. $81.5 to $82,500, or not thousand, $81.5 to $82.5-ish. Pretty strong resistance up here. That's if we even get that high. We could reject from this lower band here, or like a back test of your value area low. But I would suggest that it's likely that we are going to continue grinding down. Money flow looks pretty bad here. Let's go to the 8 hour. 8 hours is a good intermediate time frame to look at. Now, here's the good thing, guys. If we do take out the lows of $64, $65, let's say, you could be developing some nice bull divs on the chart, because we would have, if it did take out, lower low, and we could have some higher lows in here. Yeah, it would be really nice bull divs. If we come down to take out those lows, it would be real nice bull divs. So within this larger, man, this thing is just bearish. This being a three-wave structure in here really makes that a little bit difficult, because you can only clearly see these three waves here. You could be looking at a three-wave corrective move in a W, three-wave corrective move in an X, a three-wave corrective move in a Y, with your Y wave always being that ABC impulse in there, or an impulsive structure in there. And then in the bullish scenario, you're still looking for a higher low or a double bottom type of thing before seeing a nice push up. So I would be looking at those $65 lows, the SFP of those lows. But I wouldn't be surprised. I think more downside is local. Let me just, is probable. Let me just say that. If you do, you are setting up for some nice bull divs. Let's just, nice bull divs on the daily time frame. Let's go to the 2-day. Yeah, 2-day money flow starting to bottom out. You have potential 2-day bull divs if you take out that low. Nice potential 2-day bull divs if you take out that low. And then it looks like you might have some money flow bull divs on the 2-day as well. So if we get the SFP of $65, I would look for potential spot buys on this thing. Swing long spot buys, where I'm not saying it would end. I'm saying you would probably at least see a decent relief rally that lasts a couple of weeks or a month, and potentially move up. I would be looking at, let's just bring it down right below there. You could be looking at a move up to take out these local highs into a golden pocket. So from 65 to 165, depending on that. That's still ways away, because this is obviously a high time frame. But you're very locally bouncing from the 886. You're starting to bounce from that 886. Perfect tap of the 886. Just be aware, because now that this has been tapped, that low is far more likely to get taken out. And I would be watching the backtest of the value area low of this entire structure here. So it would be about $75, $75 to $76. And that makes sense as far as our bearish pitchfork goes to come up, bearishly backtest that pitchfork, that value area low. If you reject, you could expect a move down, and maybe, man, I wouldn't want to come down that low, but yeah, just be aware. I mean, very locally, you're setting up some bull divs as we speak. You're starting to see that corrective channel towards the end. So you can see a pretty aggressive flush here. Now we're starting to channel, which means exhaustion on the selling with some bull divs on the chart. It looks like this 886 is going to give us a bounce, because in a sideways range, the 886 will give you a bounce. And this is starting to look like a pretty sideways bottoming range that could develop in here. And think in terms of the bigger players, guys. In a accumulation, you have your initial strong drop making a strong low. You kind of get this corrective move and this bigger range that starts to form. If we come down and take out that low, that could be your tap 2 of accumulation. You'd get a move up, maybe even towards the highs of the range, get another move down. This could be your tap 3, and all of this could be accumulation developing near like a $60 to $50 bottom. Okay, Solana. Guys, Solana, man, this weekend was scary, because I really wanted to see $123 hold on Solana. Let me turn off some levels here. Johnny, thank you for the super chat. Yeah, we will cover XRP as well, for sure. And thank you for that super chat. Okay, guys, on Solana, primarily I've been looking at this range in here, and this range has been so profitable for me. But this range in here as a potential accumulation range. If it's a bull market, if we're going to see Solana can kind of continue and not go into a full bear market, we really need this range to hold. So zooming out, we're on the daily time frame. You can see we have a whole sideways range up here. It's almost 2 years long. This sideways range goes back to March of 2024. So if we turn on the volume profile for that range, you can see we're at the value area low of the range. And we're rejecting from the POC of the range. So this is what we've been focusing on. I'm sure Jaffiel is tired to death of hearing me talk about this chunk of price action. But he's been trading it very successfully too. So we're focused on this, right? Between the POC and the value area low. And I want to see accumulation. I was looking for a tap 1, a tap 2, a move down here, a tap 3. That could be your kind of inverse head and shoulders or your model 2 accumulation before potentially breaking this up in expansion. But the fact that we came down and almost took out our lows at 118 or 117, it was our lows at around 117. The fact that we've dropped so far already does suggest to me that we are going to eventually come take out these lows. Look at, we barely front ran it. Barely front ran that. Now we are holding, we were able to, the very next day, get back inside our value area low and close that daily candle back inside our value area low. And even looking pretty bullish right now today with a green dot on the daily. But look at how nice this would set up. If we, like, this could all be a bigger wave 1. We could retrace over the next week to like the point of control, wave 2. We'd see a wave 3, 4, 5. And then we could be seeing a bigger model 1 accumulation still. In a model 1 accumulation, you have your initial lows, a secondary lows, and your third low is lower than your second low. So that is kind of what I'm shifting my bias to now. And it would set up some nice bull divs on the chart if we could see that. But that's only the case that Bitcoin doesn't truly break down. Because if Bitcoin truly breaks down, I mean, we could see a larger distribution range happening up here where we could drop significantly. And I've covered that in past live streams. I covered that last week. So what I would say, though, on Solana, we're going to focus on this price action between the point of control and the value area low. So I'm going to turn off our large range and we're going to go look at our 2.5 month long range. That sideways price action. This right here is what we're focused on. Now, remember, at $148, I was telling you guys I was looking for swing shorts here. It was the SFP of the range highs into your macro logarithmic golden pocket. And we pulled a log golden pocket because it was more than a 30% drop to the downside. We literally got that trade that played out absolutely perfectly. 10 out of 10 trade right there. SFP into your macro log golden pocket. It rejected, changed market structure bearishly. We've continued down now. And in this move down, we could be looking at, wave 1, wave 2, wave 3, wave 4, wave 5. 5-wave move is done, just barely front running this. Now we could be looking for a corrective move to make a lower high before coming back down to take out those double bottom, pretty much that double bottom there. So we could see a relief rally on this over the next day or two, week actually. As we were coming down to make those lows, I mean, the crazy part is we weren't really seeing any bull divs on the chart. No bull divs from this low to this low. You can see no bull divs on the chart. On the 1 hour, if we go to the 4 hour, no bull divs on the chart on the 4 hour. No bull divs on NAMI. We had some hidden bull divs as before the big drop, but because we didn't have significant bullish divergences at this low and because we didn't take out the liquidity of the low, I am looking overall for a lower high before another lower low. So let's pull our Fibonacci golden pocket from the range highs to the lows that we made on the weekend. We're going to put our non-log golden pocket on. And around that value area high is looking pretty nice. Let's look at, okay, we have a lot of naked dailies up in here. Oh, and by the way, I think this naked daily is old. Or no, it's not. No, it's not. What was that? A naked weekly. This naked weekly might be old. Let me just check that real quick. I think I left it on the chart to show you guys. Come on. Yeah. See this naked weekly here was kind of, we wicked past it, but so that is old. Now we do have a fresh, is that a fresh naked weekly? I guess it was just tapped just now today. From last week. We're coming into the naked weekly point of control from last week, and we're tapping into it as we speak. So we are at resistance. We're at our 2-month range point of control resistance and our naked weekly point of control at $127. Let's turn on our daily levels because we also have this 144 to 146 looks good here because we also have a lot of naked dailies in there as well. But the big level to look for a lower high, I would say, is kind of this general area in here, a weekly level, the value area high of the range, and your golden pocket. And we could kind of push up there over the next week. We could be seeing a relief rally for the next week to come up to hit this area. Because if this impulse is done, then now we're going to be looking for like a 3-wave corrective move to come up to that area. It would also kind of stop out all this liquidity trail that built up in here. You can see all these highs in here is liquidity. So if we start to break above this POC, you could run that pretty quickly and then see that kind of 3-wave corrective move. A, B, C up. Locally, we're hitting into resistance right now. It's a naked weekly point of control, and it is our 2-month long range point of control. I would say money flow looks pretty good. On the 1 hour, we're just crossing into the green. We don't have significant bear divs here. We could be forming some between the Monday highs and today's highs. Potentially, I would say not confirmed on Market Cipher B, kind of confirmed on NAMI. Let's go to the 4 hour. Yeah, and you're already invalidating the 4 hour, and money flow's finally starting to come up here. So I would say, even if Solana gets a small pullback from here, I would look for the pullback to backtest that value area low, and I would look for continuation. I definitely wouldn't be longing right now because you would be longing literally directly into a resistance. But this move up that we're seeing is pretty nice. I do not like this double bottom here, guys. I do not like this double bottom at all. And we kind of saw something like that up at the highs of the range. We made a high. We came up for pretty much a double top. And we could see something where it retraces almost all the way up before coming back down. So I'm still hoping, and this is not a strategy, but I'm still hoping that this is going to be accumulation and that the macro value area low, which is right around $123, is going to hold, and that we're going to be able to push up to maybe even around 200 over the year of 2026. But as far as the weekly time frame, we do have to be careful here because on the weekly time frame, we do have significant signals, higher highs, lower highs here, lower highs, bear divs on the weekly time frame, money flow draining out as the range is forming and just crossing into the red on the weekly. So this could be a distribution range that is about to break down. And I would say at least come into the mid to low 70s. That's our bearish scenario. Our bullish scenario is that this is going to chop in here for a bit, take probably, and then we can hold and make a move up. Now look on the weekly time frame. This is very interesting. because we could have weekly bull divs if we come take out the low at 117, let's say, the low, the double bottom now that we have. We could see weekly bull divs here. Weekly bull divs forming, weekly bull divs forming. And if weekly bull divs form and this looks like accumulation, oh boy, that could give us a nice swing long move. So I am still hopeful on Solana. But right now we're playing the range. We're playing the sideways range that has been for about 2.5 months. This accumulation range right here between the point of control and the value area low. We have now re-entered back inside the value area low of our small range, but we've also re-entered back within the value area low of our major range, which is pretty much in the same exact area. You can see locally, what did we do? We were able to get back in the range, back test it, hold it as support. So now we're expecting at least to work our way up to the point of control of the 2-month long range. If we can flip this point of control, then there's hope that we can work our way up to the value area high. So we're at kind of a key resistance right now, and I do not want to see us reject right now. If we reject right now, this could be pretty bearish. Is Bitcoin pumping too? We are potentially forming bear divs here at the 15-minute, on the 15-minute chart. Higher highs, lower highs. Not really too much on NAMI, but the money flow looks pretty good here on the 15-minute. So even though we have a potential bear div, money flow is going to overpower that. And it looks like we're trying to break through this resistance right now. At $127 is your point of control, 127.09. So we're pretty much right at that naked weekly point of control. If we start to lose this, that's when it could get bad. If we wick up past this and start to lose this, that's when we could at least look for some sort of scalp short position. And maybe even a scalp to take out those 117 lows. Let's see here. All right. Did I long Sol? I did long Solana at 123.1, but then I got stopped out on it. I was longing, where did I? No, excuse me. I longed 125. I had a TP, a small TP, and then I got stopped out on it over the weekend. And no, I haven't re-entered since we dropped so far past 123. I haven't re-entered on it yet. And I'm not in any trades on Solana right now. Actually, Solana looks like it could be breaking out of this channel that we were looking at. So remember, we were looking at this kind of sideways and down channel chop towards the end. Yeah, we're breaking out of the channel, which is pretty nice. And we even back tested it today. So look at chopping around the channel, breakout, back test it just a couple hours ago. And now we're pushing up to actually hit our resistance. So it's kind of key. If we break above this naked weekly point of control, all of this is going to get swept so quickly. This is a liquidity trail. So we're at least probably going to come up to our second pivot of the channel at 132 and take out those highs at 132. We can even pull our volume profile and look at kind of this price action within the channel. Yeah, and it 132. I mean, like that looks pretty good. 131.67, maybe wick a little bit past it to take that liquidity. So we have potential 6-minute, or do have 6-minute bear divs, but money flow looks strong. So that's going to overpower the bear divs. But we have 15-minute bear divs. Money flow looks strong, so it's going to overpower. What I would be looking for is we're probably going to get some sort of reaction from this naked weekly. But if the VWAP holds, that's when I think we're going to make a move to try to break above this. Is Bitcoin hitting into 89.5? Ooh, not quite yet. Okay. I would wait, guys. I would wait to see, and I want to see is the total market cap retesting? Not yet. So I think Bitcoin's going to come a little bit higher. I think the total market cap's going to come a little bit higher. Okay. Quick question. Do you have anything on spot right now? I'm pretty uncertain of buying as the market is in a weird state. I do have spot. I have a portfolio of spot coins, but I haven't. The last things I bought Chainlink at like $12 and $14, and I bought some Solana, but I think it was not at 96 at the low in April, but it was around there. It was around $100 the last time we made a major low on Solana. I bought some Say or Sui. I think it was Sui. Where was that? I bought some Sui up here, but I did sell a lot of that Sui that I bought up here. I sold it once we started breaking these highs and losing these highs. I sold it. I sold most of it. I still have some of it. So some of that spot buy I have is underwater. Okay. What do I think about? Okay, answer that. Answer that. Okay. In May 2022, the fractal we are looking at, we began the large dump the day after FOMC. Very interesting. Not now. Tomorrow is FOMC, so Thursday can be the beginning of a brutal wave to 70K. Yes, Lost X. That does make sense as far as the sentiment goes right now in our Elliott wave count and everything, because if Jerome Powell's going to come out super bearish and say, "Hey guys, we were starting to raise rates. We were starting a rate cut cycle, but because of what's going on in the economy, we're going to pause on rates for a few months." That could cause risk on assets to really sell off, even though there's no actual change in the interest rates tomorrow, the federal funds rate. So we'll have to see. But that is very interesting. Thank you for letting me know that. I think this week is going to be important, guys. Obviously, last week was like the most important, or when was that? A couple weeks ago was really important. That impulse is really low probability. Another thing is the Elliott. Yes, I get what you, okay, Olive Fairy, the base channel. I know what you're talking about. So if you look at the base channel of the Elliott wave, the fourth wave came up and hit the base channel, which makes it less probable, but it's not an invalidation. It's not a hard rule in Elliott wave. So I get what you're saying, that because we have a base channel here that has been hit with this fourth wave, the top of the base channel has been hit. It makes it less likely. But even so, then, okay, so say that Elliott wave count is invalid, which it lowers the probability, but it has not been invalidated. So you cannot invalidate it completely. This still could be a 1, 2, 3, 4, 5, right? Especially if you look on charts other than the Coinbase chart where this was the low. And most of the charts, that was the low. So this is 17 days. This is 55 days. It's only about 3 times as big. And you could still be looking at a fifth wave here. But let's say that you're not looking at it that way. Let's just say you're looking at the more 3-wave W, 3-wave X, and now we're looking for a 3-wave Y. You're still looking for your Y wave for downside in the Y wave. And I covered that earlier in the stream. So whether you're looking at a complex WXY or an impulse, the overall bias locally should be to take out 80.5K. Can you look at, oh yeah, BTC Gold. Okay. Okay, let's see. I don't know if there is a chart for that. Let's go gold BTC. Uh, Jeremy or Jerry16, do you have the ticker for that? I am not seeing that. And let me know what ticker you're using and I can look at that chart. Sui. Yeah, Sui, guys. Okay, let's cover Sui. Sui is at the value area low of our bigger daily range. We're looking at this range that formed at the lows of our pitchfork. But here's the thing with SUI, guys, and I'm still concerned about SUI. I mean, so our larger move we were looking at was we saw a massive impulse up in here, right? Impulse up. And now were we looking at a larger corrective move before continuing up? That's like your super bullish scenario. And if you take that trend-based Fibonacci extinction from the highs to the lows to your lower highs, you can see we kind of hit between the 1-to-1 and the 1.236, which is your target. And it's also at the bottom of our pitchfork. And it's holding so far. But I do not like how this looks like a corrective move. And now we're starting to really push down again. So, and we did create kind of a pretty big liquidity trail in here. Higher lows all through here. This liquidity trail is pretty intense. And if we start to kind of break within it, we're probably going to come sweep those lows. The lows are these guys right in here at 130.58. So you can see 1, 2, 3, I mean like 4 little trails of liquidity to come down and sweep that. So we could be seeing a move up, a wave 1, wave 2, wave 3. We could see a wave 4 before seeing a wave 5 to come down to sweep those lows. Let's zoom in onto the 2-hour chart and we can look at this. Man, yeah. So the way that this started here, 3-wave corrective move, this, you could say this was a sideways 4 and this was a 5, but because we didn't take out that low, you can't count it that way. Man, that's tough. This push down starting with a 3-wave move here is a bit for impulse. You want to start with an impulsive wave and your sub count of a wave 1. So that really screws this up being a 1, 2, 3, 4 and then a 5 here, something like that. You really don't want to be looking at it like that. We would have to look at this maybe as a 3-wave corrective move. Then you kind of get your big flat or triangle in here, push down 3-wave corrective move. And then maybe this is your Y wave. And then I don't like that though. I don't like the way that it ends here. And then we kind of just get this channel that's chopping here. So when I'm personally am not clear on the local Elliott wave count, I go to my volume profile strategy, which would be looking at that sideways range here, this kind of sideways range that we're looking at. We are bouncing from the value area low and we're in process of trying to reclaim the POC. Now you can see if we do reclaim the POC, it's likely that we could come up to the value area high, which would be the back test of the pitchfork band. And then we could pull our Fibonacci from the highs to the lows. Let's No, I don't even like that much. Let's look at our levels on the chart. Now, this naked daily, I believe, has been tapped. Let me just double check that. Oh no, it's a new one. Okay. Yeah, so I would say we have this kind of push down in a channel that we're seeing right here. If this breaks, we are probably going to get a decent move, at least to backtest that point of control at 159 or 157 to 159. It's probably going to sweep up and sweep all the liquidity from this chop in here. Take out the liquidity of these highs into your naked daily point of control in your pitchfork band, the bearish backtest of the pitchfork band. You can see that's that bearish backtest of the pitchfork band. It would sweep all of this. Let's actually pull that channel. Let's see. That would probably be the proper pivot, and then we can put it there. Yeah, so that's your channel. We're really trying to break out of it right now and trying to break the point of control. So it's crucial on what happens here, because if we start to roll over, I do think we are going to come down and make new local lows. Continuing the bearish trend, kind of just seeing this chop continue. Maybe even continue until we get to take out that liquidity into the bottom of the pitchfork. And it would also be near the bottom of your channel. But if we can break out of this, I think we're going to sweep all of this pretty dang quickly. At least up to 157 to 159. And then if we do sweep, if we break above that, we're going to come up to the top of the pitchfork band, which is where your value area high is. And up towards the value area high, you have the golden pocket. You have the, let's see, what was it? I guess even a little bit higher. 178 to 179 is where your big resistance is up here. And that's also going to be most likely your point of control of this upper range. Yeah, right around the point of control of this upper range. So I would say this is definitely a strong resistance as well. Weekly, naked weekly point of control. But the first big level that I would be watching, this naked weekly is from last week. What if we're going to break out of the channel, this channel, you're probably going to shoot up here, reject, bullishly backtest that, and that's when you're going to sweep all that liquidity up to 157, 158. But I would be looking at kind of these three little levels in here as your resistances. And we are bouncing from the value area low. We did take out some internal liquidity locally, the first pivot there, but I don't like how this wasn't all taken out. I think that it's likely that we are going to come down and take that out and even add that low to it. It's a pretty strong liquidity trail that's begging to be taken. And if you remember around 109, we have a lot of really key support. That log golden pocket, macro log golden pocket in there. Money flow is finally starting to curve up pretty nicely here, and we did print a hidden bull div earlier today, and we're not really breaking down. Let's see that this is trying to break through the POC rather than break down. Yeah, we did have some slight bull divs. Actually, some slight bull divs from earlier today. You can see in here lower lows in here, higher lows, money flows crossing into the green. Some bull divs locally, money flow, actually pretty bigger bull divs in here. Money flows crossing into the green. So very, very locally, if we SFP this high from earlier today, we could drop right back down. I wouldn't want to see an SFP. I'd want to see the breakout up to like 150-ish, and then we could get the retrace. But even low, like look at even for the past hour or so, rejection, flip it. Now we're trying to hold it as support. What do you think about the odds to take 91 to 92K? I think the odds are pretty good based off that flat. on Bitcoin because first of all, our big resistance around 89.5. But and let me get rid of this little channel now because this is breaking out. Are we seeing volume start to come in here? Oops, what am I doing? Not the best volume so far coming in. If we're going to see a bullish scenario, you really want to see this as like a multiple 1-2, a 1-2, 1-2, even maybe a, well, you did break. You can't say that this would have to be some sort of flat in here. And then this would be a third wave to really break us out. We're coming up to fill that CME gap and hit the golden pocket right now. I want to see how we react once we hit the daily and the naked weekly. Yes, Doug, there is. You said it does not meet the requirements to be a flat ABC correction where B exceeds A. Yes, you can have a flat where B exceeds A. That is called the flat. So if you have an A wave, your B wave comes down and takes out the lows of A. That's called the flat, and then your C wave usually comes and takes out the highs of A. That's what a flat is. Because the regular ABC is a zigzag like this, and it usually retraces to around the golden pocket. But in a flat, it's a little bit different. What if we have a double 1-2 at the beginning of the move? Then the fourth wave would be so much shorter than any of these twos. No. Okay, wait. What if we had a double 1-2 at the beginning of the move? I think you're thinking are you talking about from the 86K lows? Because it could be. And then I would say we would still be developing the third wave then, and we'd want to bust through this resistance. Yeah, Elliott waves are just a bias to give you a bias. You should still be marking out your levels and looking for confirmations for the trades. Whether you know Elliott waves or not, you should be looking at the levels. Like I always say, guys, price action first. And what that means is you want to mark out your key levels of confluence, like at 89,500 to 89,300. We have a naked daily point of control. We actually have a naked weekly point of control in here as well. We have a daily level. We have a golden pocket. And we have a CME gap fill. So there's a lot of confluence of resistance in this area. So no matter if you know Elliott waves or not, when we're coming up to this area, if you're seeing some bear divs on the chart, you could look at entering a trade. Because there's plenty of people that don't use Elliott waves at all and they still trade. I would say, guys, we are developing potential bear divs, but the thing is, even here, the thing is money flows just crossing into the green on the 1 hour. And if we zoom in to the 15-minute, money flow looks strong. Money flow crossing over, money flow looking strong here. So I'm waiting on this. I'm not going to just short if we hit 89.5. I'm not just going to set a limit order to short there. And yes, there is a CME gap above. Oh, I'm sorry, Johnny, I'll look at XRP here. Give me just a couple minutes to analyze what happens right here. Okay, after Trump's speech, we will dump. Is Trump speaking right now? Is that why what's happening? Time Attack, welcome in, man. Thank you for being here. Did we fill the CME gap? Yes, we are filling it right now. Pretty much we filled it now. If we go to the CME chart, you're going to see that we just pretty much filled it. Not entirely yet, Yeah, Tiki Taku, you're saying I'm sure it's distribution to the abyss, and I think you're talking about Solana. I hope not, man, but I wouldn't be surprised. You think it's doing a wave 2 retracement? Yeah, Machi HK, very, very probable on Bitcoin. And I know what you're talking about. You're talking about the entire push down from 98K being a wave 1. And now we're in a retrace in a wave 2 before seeing a big wave 3. The only problem with counting this is a 1, 2, 3, 4, 5. Your fifth wave in here is 3 waves, and you cannot end the fifth wave in 3 waves. And I covered this in yesterday's video, but this is very hard to count a 5-wave impulse in here. Because of that, we might see an extended range in a 4 before seeing a 5, and then you could get your big wave 2 to the upside before seeing a wave 3. Yeah, Bubba Trading 9. We're doing a double 1-2, currently developing a third wave on Bitcoin, right? It's not guaranteed because if it fails here, then I would say no. You want, if we're in a 1-2, like a 1-2, 1-2, and your third wave is going to hit, you want to see now a third wave bust through this resistance with some volume increase. And then our 4-5s could bring us up to take out this high or even up to like 92, 93. Little Rich, you longed 1.37. Nice, dude. You got a very nice low there. If I were you, I'd be holding that minimum up to 157. But that could be a really nice play because that's your value area low of your big range on SUI. And if you break above that POC, what's to say you don't push all the way up to that value area high, which was at like 170, I think it was. Okay, what's the outlook on crypto with the government potentially shutting down this weekend? Well, I mean, the last government shutdown we had didn't have too much an effect on crypto. I would look at the technicals more than what's happening with the government shutting down. But I think the FOMC, I think Jerome Powell coming out tomorrow, if he comes out really bearish, hawkish in his speech, that could be a catalyst for downside. And then on top of that, we already have bearish sentiment, and then we shut down. That's what could be the killer. Okay, BLX Gold. Okay, BTC XAU. Okay, let me try that. So I got to check. I'm going to check XRP next for Johnny, and then I'll go into Bitcoin against gold. Gold is coming up to some very key resistance, though, guys. Yeah, this is a pretty nice spike in volume here. But remember, the end of a correction also ends on a spike in volume. So I want to see us come a little bit higher. We are potentially developing some bear divs on the 5-minute. No bear divs on 12. Money flow looks pretty strong here. Silver. Also, guys, silver came up to a very key target. And I showed Jason this yesterday. Silver hit the 2-to-1 Fibonacci extinction right into our pitchfork band. We could see a major pullback all the way down to like the mid-90s on silver. But you can see here, silver really did, and silver hit this resistance 117. It barely front ran the pitchfork, so we could make one more local high here. But I would be very cautious on silver. It's hitting a major 2-to-1 Fibonacci extinction into your pitchfork band. And if we zoom in on silver, I guess it's right now creating kind of a triangle in here, which is a continuation consolidation pattern. You can see silver's kind of creating this little symmetrical triangle. Usually that's a continuation pattern, continuation and consolidation. But instead of like seeing this as a bull pennant, I'd be really watching for the fake out to actually hit that band and then a drop. Gold is coming up to a pretty key resistance as well. Wow, gold is really pushing though. So as far as gold goes, we're at the 2.618 Fibonacci extinction, seeing a little bit of a wick past it on the daily, but you're at the pitchfork band, and look at, we've flipped the midline, held the midline as support, and we've been rallying up parabolically. So we're at a big resistance on gold, but it could come up to about 5,400, 5,500. It's looking like it wants to right now. Shit. And money flow just looks so bullish here. I would be careful with that though. Yeah, talk about a liquidity trail, right? Okay, guys, please hit the like button if you got anything out of the stream today. I'm going to cover XRP here really quickly. Let me just check Bitcoin and see. I mean, we're coming up into resistance. A lot of resistance in this area. Kind of a make or break point for Bitcoin. XRP. Now we were looking for the SFP into a naked daily point of control and a daily level at 184. We wicked past it quite a bit down to 180, 181. But like I still don't like these double bottoms here on XRP at 177. But we are, we did have some nice bull divs. Where was that? On the 1 hour chart as we were, no, I guess it wasn't. Was it the 8 hour then? Yeah, that's what, okay. So you see these nice bull divs here on XRP on the 8 hour. Money flow starting to turn up here. And I would be looking at, so I was looking at a couple ranges. This entire range from after the crash is important if you, and then this bottoming range, this more local bottoming range here. And we did kind of bounce from the value area low of that bottoming range. You could see it was right at like 182. And we're trying to break the POC. So it depends on what happens here. But if we also look at this range, very interesting. See, I tend to like this range, this after the crash a little bit better. And we have now flipped, bounced from value area low, and we've today back tested that point of control as support, and we're pushing. So in that case, you would say it's likely we sweep all of this liquidity. If we can break out of this kind of channel that we're in, it's likely that we're going to sweep all the way up and at least back test the channel. Okay, yeah, I mean, you you could count a 5 wave move in this move down, a wave 1, a wave 2, a wave 3, push up in a wave 4, and this was a wave 5. And then if that's the end of a 5, we're going to be expecting maybe a move all the way up to this golden pocket at 218, which is where some very key liquidity is up here. We got to really focus on breaking this here. If we can break that, we're going to squeeze up quite a bit. It looks like we're already trying to, in some ways, break out of it, flip it to support, and then we want to start squeezing soon. Money flow looks like we could. You just got to be aware because Solana's at resistance, Bitcoin's at resistance. Yeah, and you know what? That 216 to 218 is really good resistance. You have a daily level up here. You can see this daily level up here. You have your golden pocket. That liquidity grab just above that daily. And I believe there was some naked daily points of controls. Kind of in between that area. There's a couple naked daily points of controls, but I would say the one above the liquidity is the most important at 219. So the big level to watch for a lower high is right up here. And I want to look at our macro range on this thing. Which is this entire upper price action in here. And if we just look at this range, the back test of the value, we're below the value area low. So you got to watch coming up because this would also be coming up pretty much to the top of the channel. And this channel, by the way, is not pulled from the top down. I was just looking at the price action after the dump, after the big October 10th dump. Now, it does happen to line up a bit with this upper price action as well, but that's not what we're looking at. We're looking at primarily this. We had a fake out, and then we fell back in, came down to the midline. But if the midline bounces, what you're expecting to see if the midline bounces, you're looking for the back test of the channel now that you've re-entered it, and pretty much that's your value area low. If you reject there, you expect to make new local lows below this low. And I would say probably sweep all of this. Come on, TradingView. TradingView is starting to bog down because everyone's looking right now to see what's going to happen. Yeah, Drum Hop TV, I'm not shorting here either. If we hit 89.5 and start to see some bearish reaction, I might look to add to the short, but I think that we could bust through this. I mean, if we're looking at the ABC flat, you know, with this being an A wave, this being a B flat, and now our C, most common is to take out the A wave. In a running flat, you could end right here, but it's not the most common. So we would be looking to come take out those highs from last Friday. Okay, wait. I think that the wave 3 is complete from 89.5. Wait. The wave 3 is complete at 89.5. Well, we're not even up to 89.5 yet. So if this is a 1-2-1-2, You want this third wave to expand a little bit through 89.5. Unless you're talking about on the way down. But I would say, if anything, it's complete. I mean, the count here would be a 1, 2, 3, 4, 5, and it's done, right? But your fourth wave is kind of short in here. It is a valid 3-wave corrective move, though. This is a valid 3-wave corrective move. And if we pull that Fibonacci, another thing, you didn't even hit your 382. And generally, your wave 4 retraces between the 382 and the 0.5. Solid 1 hour close. I'd aim for the weekend highs at least. Yeah, Friday highs up here. Or are you talking about the? Yeah, I think you're talking about those Friday. I guess that was weekend. Yeah, Friday after market close. Bybit's hitting 89,500. Yeah, Bybit USDT is. Oh, 89.8. Yeah. Yeah, I mean that is a Saturday high too. So that's, even though it's an internal liquidity area, I'm just watching to see what happens in this area here. We still, at least on Coinbase, have not hit the daily and the naked weekly point of control. Yeah, sad 2725. It's at 89,492 on Coinbase. Let me make sure I'm being completely accurate with this. Yeah, from last week. We'll see what happens here. Still haven't even touched the daily yet. Honestly, though, guys, it looks pretty strong as far as money flow goes right now. Yeah, Boyan's a great trader, man. That's for sure. I have a lot of respect for that guy. Super chill dude, too. He's a 98-year-old Chinese man. Or at least that's the joke that we've been talking about for years. What else were we gonna look? I'm sorry, there was something else. I'm just checking to see if this chart is valid right now. Yeah, Bitcoin gold. Okay. Jesus Christ. Look at, gold is so outperforming Bitcoin lately. I can tell you right now, this kind of looks impulsive. 1, 2, 3, maybe 4, 5. We're gonna get a bit in here. I mean, it might continue down in the third wave for a bit longer. And once we get down to this area, see a bounce that could last quite a while before rolling over. This also looks very distribution like. Man, gold looks like it could run pretty good versus Bitcoin, but look at this. Bull divs that are forming. Pretty nice bull divs are starting to form here on the daily time frame, which you would expect if we're going to come down and hit this 1.618 and bounce for a couple weeks before rolling back over. Actually, it could be more than a couple weeks. It could be, what is that? 3 months, yeah, about 3 months. Chad P, welcome in, man, and thank you for being here. Okay, yeah, 618 is near $96 on silver. Okay. Where was I? Yeah, Boy in the Tibetan Monk. Secret VWAP settings. Yeah, if you ever talk to Boy and ask him about his VWAP settings. Yeah, I heard that. Not quicker. I was actually listening to the live stream about my face reveal, and he was talking about nerds on YouTube. I don't know. I don't know if I consider myself a nerd. I'm nerdy in some ways. I guess we're all nerds if we're into finance and looking into finance, but I don't think that's a bad thing. We're sitting here studying charts, and a lot of people would consider that nerdy in some ways. But for me, yeah, the freedom that it can give you, I don't care what people think. Let's see. That guy in a hat, Ada render. I probably can't look at all of those. Actually, geez, I didn't realize it was so late. I do have to get going in about 15 minutes, guys. Damn it. Come on, Bitcoin. Make your move. Nothing right now shows me rejection. Just very slight low time frame bear divs. But I would say it looks pretty good from here. We still haven't actually hit the level yet. The big, like, the within the zone, I want to hit that naked weekly. 89.5. Yeah, you're right. Not quicker. We're definitely all nerds concerning to when it comes to our friends. But I mean, I'm into sports. I lift weights, 4 or 5 days a week. I don't know. I don't know what you would say. What people would say about me, and that's okay. S&P just closed at a new all-time high. Dang. S&P, gold, silver, all hitting new all-time highs, and here's Bitcoin just been dumping for 2 months. Come on, Bitcoin. But actually, I was expecting this dump. I'm kind of happy. In some ways, it could be a really good opportunity for Bitcoin. Now, guys, I got in and I showed you guys the screenshot of this. I got into my trade at $86,302. And I have a limit TP set at 89.5 no matter what happens. Just because I want to take some profit there. I'm okay with that move. I've also taken 2 or 3 take profits. I shorted the back test of the golden pocket at 97.2-ish up here. And then I added to it here. Well, first of all, I took a major take profit at 87.5. I added to it up at 90.5, and then I took more profit at $86,300 exactly. I had a limit TP set at 86.3. Yeah, uh, Nico, you're right. Studying macroeconomics for fun sure makes us all nerds. Jesus Save 77, God bless you and welcome in. Good to see you in here. I'm going to be leaving soon, but it's good to see you in here. If S&P close at new all-time high before FOMC, it's not a good sign. Guys, I'm really worried about because we pretty much know there's a 99% chance there's not going to be a change in the actual federal funds rate tomorrow. So because it's already been pretty much baked in, no change, it's going to depend on what Jerome Powell says. And if Jerome Powell comes out hawkish because of like the chaos going on with Greenland or just whatever, whatever's happening in the housing market, there's some chaos happening in the housing market, stuff like that. It could really cause it could cause the bigger players to be bearish. And especially if Jerome Powell comes out and says, hey, we're going to pause the rate cuts for a couple months. Even if he says we're going to pause it for a couple months, wait for more data to come in, blah, 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 like he always does. That could be a very bearish sign where we're going to see a short-term sell-off because of the bearish sentiment. And as far as even the technicals go on the chart, we are overall looking for more downside because the highest probability is that this was a corrective range that rejected from a very, very key resistance. And now we're about to see some downside come in with relief bounces along the way. Yeah, and I think gold and silver are so strong right now. It's a lot of macro uncertainty around the world, not just in the United States, around the world. And gold is a safe haven, and so is silver, like precious metals in general. So we're seeing a lot of countries buy up gold, buy up silver right now. But man, silver at 117 to 120, where we're at right now, I do think we could see a pullback on silver. I mean, we're coming into pretty much a very key resistance. We actually haven't hit the pitchfork band yet, so we could make one more local high here. But coming up into key resistance here. Quite crazy. And this was so parabolic that like how much, yeah, like Travi Trade said, talk about a liquidity trail. This thing is pretty much going straight up now. And when you start to get onto these straight up blow off tops like this into a resistance, be careful. I would definitely not be buying any silver right now. And actually, for me personally, I'm not comfortable buying silver until we get like a significant retrace on this thing. I think we were looking at let's see here on the 1 month time frame. Yeah, I mean, like from this low back in March of 2021 to you have your big third wave here. We might be looking at a pretty big pullback in the next months here on silver. By the way, I talked to my rep on BYDFI, and they're going to be adding silver soon to the so that we can trade silver on BYDFI. So that's going to be pretty exciting. See where silver's at right now? I mean, guys, just be so careful. We're at the 2-to-1 fib extinction here on silver. Looking at it on the monthly time frame from the COVID lows, wave 1, wave 2, this has definitely been a parabolic wave 3 coming up to that 2-to-1 fib extinction, and it's also a pitchfork of a highly, highly explosive pitchfork. You might get that wave 4 retrace to come back down. So let's Let's pull the new wave 4 targets here. And let me just let's make this. Yeah, this has been more than a 100% move to the upside from 17 to 117, 500% move or so. We could even pull all the way back to $57 or so to $45. Now, I would also take into consideration those scales off log scale, 79 to $67, and around that weekly, you have a weekly order block in here. You see that weekly order block right there? So we could see a pullback at least down to this weekly order block around the 382. $79, you know. Um Warthog Thunderbolt, I know they do. I forgot to ask him about that. I will ask him about that. Let me make a note right now to ask him about that because I do trade. I short and long at the same time on the same coin, so there is a hedge mode. So I'm just making a note here. All right. Let me check. Let's go check Bitcoin really quickly here. Man, we are starting to see a little bit of a pullback from that area. We have 5 minutes till the candle close. I would like to see us push up a little bit higher here. No, they do. Yeah, Machi K, they definitely do. Um, Big deals. What's up, man? Big deals. Well, it's good to see you in here as well. Let's see, who was it? John, or the guy in a hat. I'm sorry I couldn't check out more of the altcoins here. Let me look at ADA really quickly. I know that on macro time frame, ADA did come down to a pretty important support level. Yeah, I mean, we're still hovering around that macro 786 Fibonacci, pulled from the bear market lows to the highs of the cycle. Let's go to the 3-day chart. So, looking at literally this entire bull market, pretty much, you can see from December of 2022. The thing is, we're losing our POC, and the way this started out up in here, it does look like some impulse. A wave 1 2 1 2, our big third wave here. So we're looking for a 4 5 4, and we want to make one more low. And coming down to about 34.5 cents, excuse me, 31.5 cents, 31.73. I would be really interested in taking that liquidity down there, and then we might see a significant retrace up, even if we're going to make a lower high before coming down to the value area low. So that's what I'm looking at. And now we did get a good bounce from this level. Like, you look at the bounce we got from this support level down here. Huge move up, but we made a lower high. And on that move, we did reject from that golden pocket area. You can see we came up, rejected from the golden pocket on a lower high. To me, this impulse is not done yet. 1 2 1 2, big third wave here. You got the 3-wave corrective move in a 4, 3-wave corrective move in a 4. You got a 5. Now we need another 4 and then another 5 in here. And you did reject that lower high golden pocket. So I would be honestly looking at minimum of taking out the lows from December, around December. What is that? 33 cents pretty much. And you're starting to see that kind of exhaustion that you like to see towards the end. You got your big push down. You're starting to see exhaustion in here. I would really look for kind of continuation soon. If you start to break these highs here, you're probably going to run up to test the POC at 38 because you can see it's also a super nice support resistance flip. It was a resistance through all of here. We flipped above it. We held it as support for a bit, and then we lost it. And since we lost it, it hasn't been tested again. So watch that 38-cent level. And if we start pushing up too much higher, we are going to sweep all that liquidity. We're going to sweep all of this into that POC. So let's see here. Yeah, I mean, as far as our local range goes, we broke back inside of it. We back tested the value area low, and now we're attempting to break up through the POC. So it's likely that we can at least come a little bit higher on this. And if we pull that Fibonacci golden pocket and look at our 786, yeah, I would say 36.5 to like 36.65 is going to be a local resistance, where if we're going to continue overall kind of this grindy structure, we're probably going to reject from this area. That's a very internal resistance though. So if Bitcoin starts moving through that CME gap, through our local resistance we're at now, this thing's also going to keep moving through it. Probably come all the way up there, reject. We could even kind of see some impulsive structure in here. Okay. Bear flag on Bitcoin on the 1 hour. I I think you're talking about like this is the pole and this is the flag. Yeah, but generally in a bear flag, you don't break the 0.5 Fibonacci. So if we're pulling from the pole to the beginning of pole to the end of the pole, which would be this, you don't break the 0.5 Fibonacci often in a bear flag. You actually tend to reject from the 382, but we've already hit the golden pocket. So I wouldn't necessarily call it a bear flag. And then also, if we look at our trend-based Fibonacci time, if you go from the start of the pole to the end of the pole, okay, if you pass the 1-to-1 Fibonacci time, that's getting a bit long. You don't want your flag to be more than 1 times the length of your pole. It's actually the hard invalidation is kind of that 1.618, but I just would be cautious with calling that a bear flag. Let's say that. If that's what you're talking about. Okay, the guy in the hat. That's a good question. Why do we need another 4-5 on ADA? So anytime you're in impulsive structures, let me just go to ADA real quick. If What's important in Elliott waves is to know the difference between impulsive and corrective structure. So let's say we're looking at a bearish impulse, a wave 1, a wave 2 usually retraces to the golden pocket area. Your wave 3 is usually your longest, strongest, most volume filled wave, in this case to the downside. And then you'd get a 4, and then you'd get a 5. So that's impulsive structure. Corrective structure is a 3-wave move versus a 5-wave move, or versus a multiple. So sometimes, though, you have some chop at the beginning of your impulse. You do something like this, and then you get your move down. So if you have any overlap between the lows of your wave 1 and the highs of this wave 2 here, it invalidates it as an impulse. That's a hard invalidation. Or if you come up and reject from the golden pocket, there's overlap. So then in that case, in the bearish scenario, you have to say this is your primary 1, this is your primary 2, this would be a secondary 1, a secondary 2, and then you could have even a trinary 1, trinary 2, like that's what they call a multiple 1, 2. Then you get your third wave. If you have 3 1 2s at the beginning, you have to have 3 4 5s at the end. Now, if you have 2 1 2s at the beginning, you have to have 2 4 5s at the end. And if we go back onto the daily time frame, I mean, this is pretty damn clear on ADA at the top of the range up here. You can see there's overlap between the lows and the highs here. There's overlap. So we can't say this is like a 1, 2, 3, 4, 5, and then something, something else different. We have to say that this is a primary 1, primary 2, secondary 1, secondary 2, and then your big explosive third wave starts to the downside. Now, within your third wave, you're going to have an Elliott impulse within itself, and that's when you zoom in and look at that. But you can see we had that nice 3-wave corrective move breaking local market structure here. So that's why we could say the 3 ended here. This was a 4. New low means that could be a 5. And then now we had a lower high from the golden pocket. So we would want a lower low. Because we have 2 1 2s up here, we need 2 4 5s down here. 2 1 2s, big third wave. Now we need 2 4 5s down here. I'll tell you what, though. I actually would like to set an alert on this, because if we do SFP that 31.7, that could be a very nice long position. 39 or 31.7. Okay, guys, I'm sorry, I do got to get going. I will be live on Thursday at 2 p.m. Eastern Standard Time. I'll make a video tomorrow. I'll keep you guys updated in the Telegram. If you guys want updates in the meantime between my streams and videos, join the Telegram. All you have to do is sign up with BYDFI using my affiliate link and deposit $100 into the exchange. Once you've done that, you can click the Telegram link in the description of the video and type in /verify in your user ID, and that'll get you into the Telegram community. And once you're in, you're in. You can tag me in the general chat and ask me questions about the altcoins, questions about Bitcoin. Just keep an eye out on my analysis for that, whatever I'm looking at for the day, or on Bitcoin. Primarily, I'm looking at Bitcoin. So if you're interested, links are in the description below. Please hit the like button on your way out, guys. I appreciate all of you being in here so much. And I will see you Wednesday or tomorrow for a video.